Japan just handed America $550 billion, and the first three projects have already broken ground. But here is what nobody is telling you. Japan's own chief negotiator stood in Washington and publicly admitted there are still significant gaps in this deal. So before you believe the headlines, you need to understand what this money actually is, where it's going, and whether American workers will ever see it. If you want financial analysis that goes deeper than the press release, hit subscribe right now. This channel breaks down the real numbers behind the biggest economic announcements daily. Let's start with what actually happened. In July 2025, the Trump administration announced the largest foreign investment commitment in American history. Japan pledged $550 billion targeted at rebuilding American industries that have quietly hollowed out over the last 2 decades. Semiconductors, liquefied natural gas, critical minerals, shipbuilding, pharmaceuticals,
artificial intelligence infrastructure, quantum computing. In exchange, Japan's tariff rate dropped from a threatened 25% down to 15%. The deal was signed September 4, 2025, by Commerce Secretary Howard Lutnik and Japan's trade negotiator Ryosei Akazawa, and it came with a deadline that changes everything. Every dollar must be committed before January 19, 2029, the last day of Trump's second term. Now here is where it gets interesting, because the funding mechanism Japan is using to actually raise $550 billion is the most important part of this story, and almost no one is explaining it. Japan's finance minister confirmed 3 sources: dollar-denominated bonds issued in international capital markets, Japanese government yen loans, and most significantly, transfers from Japan's own foreign currency reserves, which stood at $1.324 trillion as of August 2025. The Federal Reserve Bank of St. Louis analyzed this mechanism directly. Their conclusion: the $550 billion represents roughly 12% of Japan's entire 2024 GDP, a sum that can technically be mobilized, but only through deliberate, sustained government coordination across 3 full years. That is not a rubber stamp. That is a high-wire act with a hard landing if execution falls short. Stay with me, because the project-by-project breakdown is where this story gets real. Drop a comment right now and tell me which industry you work in, because what you're about to hear directly affects your sector. 3 projects confirmed in February 2026. First, a $33 billion natural gas power plant in Ohio, projected to be among the largest ever built in American history. Commerce Secretary Lutnik identified why this matters beyond energy. The single biggest bottleneck slowing America's AI infrastructure expansion right now is not chips, not software, not engineers. It is electricity. Every data center, every semiconductor fab, every EV manufacturing line requires staggering amounts of power. Japan's investment in Ohio turbines, transformers, and cooling systems is not energy policy. It is the physical prerequisite for American technological dominance in the decade ahead. Second, a $2.1 billion deepwater crude oil export terminal in Texas, expanding American LNG capacity to global markets. Third, a $600 million synthetic industrial diamond facility in Georgia. This one sounds small. It is not. Industrial diamonds are essential for the cutting, grinding, and polishing tools inside every semiconductor fabrication line, every aerospace component, every advanced defense system. China has dominated synthetic diamond production for years, and China's export restriction playbook has already proven it is willing to weaponize that dominance. This facility changes that calculus entirely. A second tranche of $73 billion has since been confirmed, targeting energy infrastructure including small, modular reactors. The program is moving. Real money, real construction timelines. But now we get to the question that the Peterson Institute for International Economics raised, the question Washington does not want to answer out loud. How much of this $550 billion is genuinely new investment that would never have happened without this deal? And how much is simply repackaged money that Japanese companies were already planning to spend in America anyway? This is the additionality question. And the honest answer is both things are true at the same time. Some portion is genuinely new. The Alaska LNG project, a $44 billion facility that Japanese energy companies had repeatedly hesitated on due to profitability concerns, now has loan guarantee support through the fund that changes the financial math for firms that previously couldn't justify the risk. That is real additionality. Capital that was sitting on the sideline is now moving, but another portion is repackaged. Toyota's battery plant in North Carolina, already under construction before this deal existed, may be counted toward the $550 billion total. Hudson Institute researchers acknowledge this tension directly. If Japanese firms invest using their own resources outside the official fund, that doesn't count toward the $550 billion even though it achieves the exact same underlying goal. And the October 2025 signing ceremony in Tokyo included multiple company commitments described as expressions of interest in possible projects, not signed construction agreements, not hired workforces, not binding contracts. Here is the detail most American outlets buried entirely. Japan's Trade Minister Ryosei Akazawa stood in Washington in February 2026 and stated publicly that significant gaps still remained. That sentence, from Japan's own chief negotiator, is the most important line in this entire story. The MOU is not a legally binding trade agreement. The White House released its version of the deal's details, while Japanese officials were still on their return flight home. That is not a signed contract. That is a framework with enforcement teeth, the tariff threat, but enormous room for interpretation on both sides. The implementation risks are concrete. Semiconductor fabs take 3 to 5 years from groundbreaking to production. LNG facilities require 5 to 7 years from approval to first delivery. The $33 billion Ohio power plant still requires federal environmental review, state utility commission approval, grid interconnection studies, and multiple permitting rounds across agencies. Japanese private sector representatives cited regulatory and permitting bottlenecks as their single greatest concern about delivering within the fund's timeline. Commerce Secretary Lutnik signaled Washington may ease visa regulations to allow Japanese engineers and construction supervisors to enter the United States to build these facilities and train American workers. That detail matters. The deal includes explicit Japanese vendor preference during construction. American workers receive 90% of profits and the long-term jobs, but the immediate construction workforce will include Japanese technical teams. The benefit is real. It is phased. It arrives after construction, not during it. The IMF's 2026 review noted that Japan's $550 billion commitment may redirect capital that would otherwise have flowed to Southeast Asia or Africa toward the United States instead. That is unambiguously good for American workers. It is not new money created from nothing. It is a geopolitical capital reallocation triggered by the tariff threat and structured by a government-to-government framework unlike anything seen in post-war economic history. The Eurasia Group put it precisely. In 2026, all eyes turn to whether Japan can actually ramp investment at the pace the commitment demands. Trump's watchful eye remains fixed on Tokyo. The tariff mechanism is the enforcement lever, and the January 2029 deadline tightens with every quarter of delay. Here is the bottom line every American worker needs to hear. This deal is real. 3 confirmed projects. $36 billion in first tranche commitments, $73 billion in a confirmed second tranche. a $44 billion Alaska LNG project moving toward viability, a 15% tariff on Japanese goods instead of 25%, meaning Japanese cars, electronics, and industrial equipment cost Americans less, and a strategic industrial renewal across semiconductors, critical minerals, AI power infrastructure, shipbuilding, and pharmaceuticals that directly counters China's growing ability to weaponize supply chains against American industry. Whether this becomes the greatest bilateral industrial investment in American history or the world's most expensive press release will be decided project by project, tranche by tranche, over the next 3 years. And we will be tracking every single development as it happens, every day. If this breakdown gave you clarity that the headlines didn't, leave a comment below and tell me which city you're watching from. That comment tells me this work matters. And if you're not subscribed yet, this is the kind of analysis we publish every single day.